Hi, this is Paul with this week's Market Talk. Amber is on assignment, and so you guys will have to put up with me introducing Market Talk. I will be really thrilled and relieved when Amber comes back because, as you'll be able to tell, Amber's way better at this than I am. So this week, we've got a few things to cover, and Ian's going to start things off by covering what's on his plate. Ian, to you.
Thank you, Paul. So this week I want to go over a few of the macro trends since Amber's out. I've been keeping a close eye on this segment of the market. So what I'm seeing right now, the first thing I'm going to go over is the jobs report. So in March, it was reported that there's about 7.58 million job openings in the United States. And this is a huge number. It's over 250,000 jobs higher than what was expected. And it's a lot more than the amount of unemployed workers. Actually, it's the 11th straight month that the number of open jobs has been 1 million higher than the number of unemployed workers. So right now in the jobs market, we're seeing a situation where people are comfortable leaving their jobs, looking for other opportunities where they'd be better suited or where they'd be happier. And a lot of the time, when a lot of people are quitting their jobs, people expect that to mean that the economy is not strong. But in fact, a lot of the time, it means the economy is very strong. Because like I said, people are quitting because they see that there's a lot of openings elsewhere. They find places that they're happier, they're better suited, and just that they want to work more than their current job. So that 11th month span really signals a huge shift in the momentum of the jobs market, because for the past about 20 years before that, there were more unemployed workers than job openings. But now there's a lot of demand in the jobs market, a lot of room for people to go into a different area of work, and that's very good for the economy. So another good area in the economy that we've recently seen some data come in for is consumer sentiment. So we recently saw numbers come in for that for both current situation as well as what people believe is going to happen over the next year for consumer tendencies. And both of these numbers were much higher than they were in December. We saw it kind of bottom out in December because of things like the government shutdown, the stock market was weak, so there were a lot of factors that were making people pessimistic about consumer sentiment. But now we're back about as high as we were before that. And just to give an overall kind of, to put it in perspective, the consumer sentiment was around 90, whereas in December it was about 75. So just in these 3 short months, we've seen this data really start to ramp up higher. Before that 75, it was around 90 to 95, so we're right back where we were before. And the consumer economy makes up about 2/3 of GDP. So this is a huge segment of our overall economy. And the fact that it's doing well and that it rebounded so strong is a great sign for the economy in addition to the jobs report. And so one of the driving factors in the consumer economy is how much money people are making, because it really depends on disposable income and how much people are spending. And wage growth over the past year we've seen has grown 3.4%. So this is about 60% higher than inflation, which came in at 2.1%. So since wage growth, that's average hourly wage growth, by the way, is 3.4% higher than it was a year ago. And the fact that it's that much higher than inflation is very bullish for the economy because people have more disposable income. So it also means that companies have more income to pay people. So the companies are making more, they're dishing it out to their employees. The employees go and spend it, put it back into the companies, and it's just a cycle that keeps the economy moving strong. And this is exactly what we're in the midst of right now. And looking at the market, over the past 14 months, the S&P 500 has not really moved. So we believe that there's a lot of upside right now in the market. A lot of negative things were priced into the market because a lot of fear about things like a recession, a lot of fear about unemployment, geopolitical risk, things like that. But we haven't seen any of these things materialize. And instead, we're seeing it go the opposite direction, where the economy is very are making more money, companies are making more money, and there's a lot of open jobs, demand in the job market. So all of these things combined, we believe, are very good for the market since it priced in a lot of things that have not materialized yet. So that's what I've been seeing over the past week. And Paul?
Thank you, Ian. Some great stuff there. And I just want to follow on from some of the points that Ian brought up, which is that Ian said that the S&P 500 has largely been flat over the 12 months. However, we don't have the numbers today. However, you know from Amber's reporting on the disruptification index that we track at Bold Profits that, well, we're blowing the S&P 500 away. And that's because the S&P 500 is filled to some extent with these old companies that are really fading away. They're in decline, and eventually they're going to go to zero. And this is one of the reasons that we tell you to invest in the new, and we tell you in our Bold Profits Daily every single day. One of our analysts is telling you to invest in the new through some ETFs. So if you're not reading Bold Profits, if you know other people that can benefit from it, recommend Bold Profits to them. The other thing that I want to follow up on Ian talking about is wage growth. And the one really, really great thing about wage growth that's happening right now is the fact that there's no inflation as a result of it. If you go back in time and study history, when there's wage growth, some of it clearly is fake because you also have inflation simultaneously going up. In other words, some of this is really just, currency manufacturing. In other words, the government's just making money and pushing it out there. However, we're seeing non-inflationary wage growth, which is absolutely incredible. And to some extent, it's really, is the promise of what we have been telling you about, is the benefit of all this technology. So just following on from some of the comments that you had, Ian, great stuff there. So before I go into my updates on industrial production, Bitcoin, Apple, I want to tell you that this video is being sponsored by my publisher. And my publisher has a special deal that's out there where you can get a special report that covers artificial intelligence, blockchain, Internet of Things, has 3 unbelievable, incredible, phenomenal ideas that really, I believe, really get to the absolute heart of these megatrends. And this report is entitled The Coming Tech Boom, 3 Stocks to Retire a Multimillionaire. So if you look at this below this video, you'll find a link. Fair warning, this link leads to a promotional video that goes on for about 30 minutes. However, it's packed with facts, has incredible information. So click on it, you'll learn a lot. And if you sign up, you'll get this unbelievable report. So on to my update. So I've told you in the past that industrial production is one of the things that I really, really track, because when I look back through history, if a country is not making things, which is really reflected in the industrial production number, it's usually a sign that an economy is peaking, that trouble's coming. It's rarely like where it's in the first month. However, if you see an extended period of time where industrial production is really peaking out or flattening out, which as you saw in the late 90s, and then eventually you saw what happened, which is we went to really almost a 2-decade decline in terms of actual real wage growth and all the things that really matter to us as people. So industrial production is reported monthly, and industrial production was actually up. Now within that number, there were some cross currents where manufacturing was slightly down. So it's something that I'm going to keep track of, and we'll let you know if we really see substantial weakness, because for sure it will be signaling a peak in the market. However, there's no sign of that now. And then I want to now follow on from something about inflation, which is that you'll see that last week, my Tuesday Bold Profits Daily was about Bitcoin, and where I really am beginning to see the first real signs, the green shoots of a new bull market in crypto. And you saw it again this week where Bitcoin traded about $4,000 for a little while. And you can also begin to see it where there's a lot of people that are really starting to enter the space. JP Morgan has issued a cryptocurrency. Facebook is working on a cryptocurrency. So we ourselves have some ideas on this, and so watch out in the future for something to come from us. The other big news is Tesla revealed its Model Y. And take a look at this picture, because this is what the Model Y looks like. It's their sort of econo SUV, if you will. It's their mid-priced SUV, and you'll see that their pricing starts at something like $46,000. However, that's going to be a fairly pricey version of it. They're eventually going to get to a much lower price version of it. However, you can see this I believe is going to be a big seller. And if you look at what really sells in terms of cars in the United States and increasingly around the world, it's SUVs. So Tesla entering the SUV market with a mid-price SUV, I believe, is absolutely great for Tesla. And their pricing, I believe most people are going to walk into, because more and more people realize that an electric vehicle's price structure is very different than a gas car. You're front loading most of your expenses because you are only going to spend a tiny amount of money to refill your car charging with electricity, versus a gas car where you have to fill your gas tank up every week, you have to change your oil every 3 to 4 months, then there's all the maintenance that's associated with it because it's a much more complicated piece of machinery. And an electric motor is much simpler and requires very, very little servicing. So more and more people are going to work that out, and I believe you're going to see Tesla sales really move up, especially now that they have an SUV that's out there. Finally, I want to mention Apple, because I've been seeing a lot of stuff on the smartphone market. Many of you have seen that there's now a foldable phone by a number of Chinese manufacturers. There's also new competitors that are coming online with different ideas. And Google is coming out with its own very artificial intelligence oriented phone. And so there's so much competition. And you guys know that I have been negative on Apple now, really for the last 3 years, from the time I've joined this publishing company. I've been negative on Apple, and I'm still negative on Apple, even though its price has been going up. I would still tell you that Apple stock is a sell. They are behind on innovation. They are behind in all the things that they once led, whether it be Siri or home devices, or for that matter, really even laptop computers. More and more people are beginning to choose other ones. And so I still believe that Apple is a stock that should be sold into any rallies. And in truth, I believe that their product set is pretty disappointing. So those are the things that we're looking at for this week. We'll have unbelievable, great write-ups for you coming all this week. So watch out for them on Bold Profits Daily. So with that, I'm going to say for Ian, Amber, and I, we're bye. And this is Paul and the team saying goodbye.